Welcome to Everyday Money Matters, where we explore practical tips on saving and making money in your daily life. Get ready to embark on a journey towards financial empowerment and smart choices. Subscribe now and let's make every day count for your wallet. In today's video, we will discuss the average credit score in America. Now let's get to it. The average FICO score in the United States was 715 in 2023, according to Experian data, increasing by 1 point from its 714 average in the third quarter, Q3, of 2022. It marks the 10th consecutive year that average FICO scores in the U.S. haven't decreased on an annual basis. The last annual decline occurred in 2013. Despite economic headwinds, consumer finances remained strong. Except for the anomalous in every way recession sparked by the pandemic in 2020, economic growth, near full employment levels, lower delinquency rates and lower debt service obligations, as well as a more informed consumer borrower, have all played a role in the average FICO score increases over the past decade. Consumers are now largely aware of the importance of credit scores. Many financial transactions most consumers engage with, such as auto financing and credit card purchases, depend on credit scores to qualify and participate. The economic turmoil of the past few years has caused some consumers to take a renewed interest in their personal creditworthiness. More on that later. Credit scores continue to tick upward, for now, at least. While an average FICO score on the upswing can indicate, in very broad terms, that consumers have fared well in recent years, it doesn't necessarily mean that average score increases will persist indefinitely. Despite the slight increase over the past 12 months, average FICO scores have meandered throughout 2023, with average scores increasing from 714 to 716 this past summer, before settling at 715 at the end of the Q3 2023. Nonetheless, average balances for most types of loans, as well as both fixed and variable rates on those loans, have increased sharply as the Federal Reserve attempted to keep the lid on inflation by raising the key Fed funds rate throughout 2023. FICO score increases were broadly distributed among the generations, with only the silent generation not showing an increase in their average FICO score over the past year. Other generations notched a 1, 2 or 3 point increase in 2023. On average, younger generations have scores that are considered good, while the average scores of the two older generations are considered very good to lenders. Although a consumer's age isn't considered in determining a FICO score, the length of their credit history is a factor, as the scores above neatly illustrate. Seniors likely have accrued years of credit history, while Generation Z is just getting started on their financial journeys. Lenders are being more discerning about how much credit they'll extend to their borrowers in the form of unsecured credit lines. That tightening of credit limits, combined with an overall increase in credit card balances throughout 2023, contribute to consumers now using 30% of the credit extended to them. At an individual level, 30% usage of one's credit is the point at which credit utilization begins to have a greater negative effect on credit scores. In general, the lower the utilization ratio, the better for credit scores. Average utilization ratios for those with a 660 FICO score, considered fair by lenders, was 54% in 2023. But for those with a 720 FICO score, considered good, the average utilization ratio was 34%. Delinquency levels were abnormally low during the pandemic, as government relief programs and subdued economic activity meant more consumers than usual were keeping up with credit card and other debt obligations. Now that economic activity has normalized, relatively speaking, so have derogatory marks on credit reports, which can reduce FICO scores. As of Q3 2023, 2.45% of credit card accounts were 30 or more days past due, according to Experian data, up from 2.07% in Q3 2022. Among other delinquency data, mortgages remain a bright spot, as most homeowners with mortgages finance them at rates significantly lower than the 7% or higher rates prevailing for a 30-year fixed-rate mortgage in 2023. More homeowners are keeping up with their payments than before the pandemic. Only 1.88% of mortgage borrowers are behind on their payments in Q3 2023, versus 2.48% in Q3 2019. Most consumers, nearly 4 in 5, say they know their credit score, according to a survey Experian fielded in November 2023. The youngest consumers in our survey, ages 18 to 24, were less sure where they stand. Understandable, as many young adults under age 25 are only beginning to pay their own bills and handle other financial tasks. Nonetheless, consumers broadly appear to have a decent understanding of where they stand with their current credit scores, which equips them with key information they can use to make better financial decisions. If you found this video helpful, give it a thumbs up, and share it with anyone who might benefit, and don't forget to subscribe. Thanks for watching, see you in the next video.